Joby Aviation just flew a piloted electric aircraft between two U.S. airports. The stock is trading around $13 and down 19% this past month, but still up big on the year. And here's the million-dollar question. Is Joby the future of transportation or just another hype cycle waiting to crash? On one hand, Joby's building a 5-seat, zero-emission aircraft that can fly 150 miles at 200 miles per hour. And they've logged already 30,000 flight miles, locked in partnerships with Toyota and Delta, and dropped $76 million to acquire Blade's passenger business. That's not just a prototype anymore. That's a company trying to own urban air mobility. But this is where the problem comes in. Joby made just $15,000 in sales last quarter. Meanwhile, it burned through $325 million. It's the worst loss yet. And they're only 3 out of 5 steps through the FAA certification. If those approvals stall, this $8 billion company is stuck on the runway with no way to make any money. The average Wall Street price target says Joby could run another 60% higher from here. But I'm watching one signal most investors are ignoring: the defense contracts. The Pentagon just gave Joby a chance to prove its autonomous tech, logging 7,000 miles of flight in one exercise. That's not just validation. It could unlock billions in government spending before the air taxi dream ever takes off. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So today, I'm going to break down whether Joby Aviation is a speculative bubble or one of the most undervalued shots at reshaping the way we move through cities. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. And that's a good thing. I'm not here to sell you hype. I break down the numbers so retail investors like you can make smarter, more confident, long-term decisions. Joby Aviation is in the race to build electric vertical takeoff and landing aircraft, or eVTOLs. While Archer Aviation, another competitor, promises 10-minute city hops, Joby's vision is even broader. It's to redefine urban air mobility entirely, replacing congested commutes with quiet zero-emission flights. So, can Joby really deliver on that dream, or is this just another futuristic fantasy that Wall Street is overhyping? Well, their flagship aircraft is a piloted 5-seat aircraft with a top speed of 200 miles per hour and a range of 150 miles, making it one of the most ambitious designs in the sector. They've already logged more than 30,000 miles in test flights, secured strategic backing from Toyota and Delta, and recently completed the first piloted test flight between U.S. airports. Adding in their $76 million acquisition of Blade Air Mobility's passenger business, and suddenly, Joby isn't just testing aircraft, it's similar to Archer, positioning for launch. So you could say they're not just dreaming, they're already building the runway. But is the market buying it? Let's find out. Now, before I dive in, let's talk about the stock price, because let's face it, that's why you're here. Feel free to scan this QR code if you want to follow along. Joby is sitting around $13 at the time of recording. It's down about 19% in the last month, though its year-to-date and 52-week performances are still well into the green. In other words, this stock has been on a roller coaster, but I think the ride isn't quite over yet. And with that, a consensus among 10 analysts rate Joby stock a hold with a 52-week high target price of $22 per share, suggesting as much as 63% upside. However, the average score has been going down over the last 3 months. And that's the problem, right? Wall Street can't really make up its mind. So reviewing the charts is one way to determine the company's trajectory, but it doesn't give us the whole story. To truly understand Joby's runway, we need to look under the hood, or better yet, under the balance sheet. While its aircraft may be futuristic, its numbers today may tell us if it can actually get off the ground. So it's important to note that Joby is still a pre-revenue company. It hasn't generated any meaningful sales because no aircraft have been launched yet. Its most recent quarterly financials reported sales of just $15,000, and that was actually down 46% from the same quarter last year. And these numbers came mostly from flight services. That's testing, demos, and occasional military evaluations. So really, I wouldn't worry too much about revenue. But here's what really matters. Joby's net loss exploded over 163% year over year to $324.7 million, its worst quarter since going public. And a big chunk of that came from operating expenses, $167.9 million in this quarter alone. Now, losses like this are expected before a launch, but they can't burn cash forever. And when you see losses growing faster than progress, you need to ask yourself, how long can investors stay patient? So Joby's financials are still small and losses are piling up, and that's to be expected. So what we need to watch out for right now, I think, is their milestones. Is Joby actually hitting its targets? Because this is where the story starts to get interesting. Joby completed a landmark U.S. defense exercise where its superpilot autonomous tech logged more than 7,000 miles of operations and 40-plus flight hours. That demo didn't just show reliability, it opened the door to competing for a $9.4 billion Defense Department budget for autonomous and hybrid aircraft. Wins like this could accelerate Joby's credibility, bring in near-term revenue, and strengthen its long-term air taxi rollout. And that's a signal that I think many investors are missing. Government contracts could bridge the gap until commercial flights are approved. Aside from that, Joby just wrapped up its deal to buy Blade's passenger business, and that's a big step towards getting air taxis off the ground. With Blade's network of terminals and loyal flyers in New York and Southern Europe, Joby now has a ready-made customer base and infrastructure in place. Blade will keep operating under its founder, Rob Wiesenthal, while Joby focuses on certification. So I see it as a smart move that speeds up the road, or rather, the sky to commercialization. So on the growth side, the pieces are starting to come together, but there's still a huge risk that I see hanging over the company. So yes, I think it's fair to say that Joby is hitting its milestones, and increased exposure across the industry is promising. Now, here comes the 500-pound gorilla. Joby's net loss of about $325 million last quarter is hard to overlook. Spending has been climbing every quarter, and that burn is going to keep accelerating until real sales show up. And like I said before, losses are normal at this stage, but here's the problem. Joby isn't yet commercially certified. And they're only 3 out of 5 steps through the FAA's process. Until they clear it, they can't scale flights or generate any meaningful revenue. Delays here could push the launch back even further. Increasing losses plus no revenue, well, that's not just uncomfortable. That's a ticking time bomb. And if they run out of time, investors could get crushed. So after all of this, is Joby stock a buy? Well, let's look at its valuation, because valuing Joby, just like its closest competitor, Archer Aviation, is tough. Both are pre-revenue. So metrics like price to earnings or cash flow, well, they don't apply when you don't have revenue or profits. Instead, we have to consider the book value. The book value is the amount that would be left over if Joby sold off all their assets at what they say it's worth today, and then pay off all their debts. Joby trades at about 12.4 times its book value, which is a lot higher than Archer at 3.2, but way below Eve at a crazy 84.7. That puts Joby somewhere in the middle, leaning toward the expensive side. Until they're generating consistent revenue, most of the stock price is going to be based on hope and execution risk. So if you believe in Joby, you're really betting on its FAA approval and their ability to commercialize before the cash runs out. Still, even with all this uncertainty, one thing is clear. Joby's business is in its early days. If you're going to invest, it might make sense to keep it as a small part of your high-risk capital and scale up once we see a little bit more certainty. That's the smart way to play a moonshot. Start small and scale when the risk drops. So that's my take on Joby Aviation. But what do you think of the company? Are you buying into their potential? And did I get this analysis right? Let me know in the comments below. And while you're there, if you found this breakdown valuable, do hit those like and subscribe buttons so others can find it as well. And folks, this is just the beginning of the story here with Joby. Thank you so much for watching, and I'll see you next time.